Hello, welcome to Trading Bootcamp Lesson 4. The previous video, Lesson 3, was shot on Sunday, and I'm shooting this video at the end of trading day on Monday, January 8th. At the end of Lesson 3, when I put on the channel, I drew the channel for Palantir. I mentioned and stated that I like the stock even more based on what I see here as far as the channel. And as far as Monday, I try to initiate more position. I already have a put spread here, um, but I was looking to add shares. I have some orders in, but a little bit too low. That's okay. But going forward, I will look to add more position, whether it's more puts or some small amount of share here and there for Palantir, because I like what I'm seeing here and the way it behaved today. Decent, but for this video, I want to focus on how you should interpret the action of a stock on a daily basis. Sure, is today a good day for Palantir? Yes. But because it is a good day for Palantir, does that mean that you should jump in FOMO into buying Palantir? The answer is no. Why? What did the overall market do today? Big update, right? Big update. NASDAQ, let's take a look real quickly. Big update. Over 2%. That's huge. Huge, okay? So you can't look at a stock in isolation. The only time that you can look at a stock in isolation is on specific news. Okay, always, whenever you see big movement, whether it's big up or big down, I will consider a 4.3% is a big up, right? If you have a big up or big down in a stock that you're watching, owning, following, would like to get in, the first thing you need to do is look at the company specific to see if there's any news, any catalysts to move it. Next up, look at the industry. Look at the software industry. Whatever industry Palantir is, look at the industry overall to see if it is an industry-wide movement, because there are rotation of capital, rotation of money into sectors from time to time. If you understand the market, the dynamic of the market, you see this happen all the time. Sometimes big money rotate out of certain sector to chase certain sector. This is a limited amount of money out there. So if a hedge fund, a mutual funds want to invest in, let's say, pharmaceutical, let's say they decided for whatever reason that, hey, they like the future of pharma, biotech, and they want to shift and increase their exposure from, say, 2% of their portfolio to 5% of the portfolio, guess what they have to do? They have to sell something else in the portfolio in order to allocate that money into what they want, right? So same thing with any sector. So as always, I advise people, don't look at your stock in isolation as if like it moved by itself. Sometimes it can, if there is specific company news. If not, step back, look at the sectors. And if it's nothing that you can see with the sectors, then another step back, make another step back and take a look at the overall market, right? So sometimes everything goes up. Like today, the NASDAQ went up 2%. Not a surprise that Palantir went up big as well. So because of that, if that's the reason why your stock that you like went up, the last thing you want to do is chase, okay? Because it basically just a momentum movement. It does not say anything about the prospect of the company is brighter, right? So use those kind of thinking to prevent yourself from FOMO into buying something because, oh, everything is green. No, always those are the last thing you want to do, okay? Buying on green because you see everything is up, that's the wrong thing to do, okay? It's the absolutely wrong thing to do as a trader, okay? There's a saying in momentum trading on some managers that buy high, sell higher. They want to buy strong stock. Well, I don't um, prescribe to that kind of thinking. I have a different kind of mindset when it comes down to trading. Mine is simpler. Buy on red, sell on green. Okay, so when something is up, if I'm not in it, that's fine. I don't need to chase it. I'd rather buy something on a dip into support and then sell on green into resistance. So for me, when I look at Palantir like this, the right thing to do is buy on support, right? That's why you see this chart, the channel. So for me, would I buy into Palantir, say, Tuesday or Wednesday? Maybe, if it's a red day. Keep in mind, also, another thing to take into consideration when you trade the market is also understand the external factor that can impact the market during the week. We have a very sensitive environment right now. This week, we had the big CPI data, the big inflation data that can move the market significantly the opposite way compared to what we have today, right? So be aware of your surrounding. Keep your head on the swivel, as I advise a lot of people. It still boils down to you cannot just look at your stock that you like in isolation. Look at your stock, your industry, the market, and then the rest of the economic environment we have to deal with. Okay, but as a fan of Palantir right now, if there is a minor pullback into support, I can see myself adding a few shares. I can see myself selling a put. Now, when it comes down to selling put, there's two ways to do this. Well, there's multiple ways, but I'm going to outline two ways that you can play that I normally play. There's multiple ways, okay, more than two, but there's two ways that I would play normally. First, I can, outside of buying a little share outright, never, 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 never buy all of the share I want at the same time. Let's say I want to own 100 share of Palantir. My first buy of any position is always the smallest buy, right? It's arrogant to jump in and say, okay, I want to own 100 share of Palantir, so I'm going to buy 100 right now. As if like I can't get a better price. It's it's arrogant and stupid. But one thing I can do as far as using option is sell a put. By selling a put, if you don't understand options, please Google it. There's plenty of example lessons on YouTube on selling naked puts. Do that research for yourself. I can do a naked puts. The question is where? Okay, so we have a gap right here. Okay, there's a gap where the stock went from here to here, and the gap is let's see, 14.96. So it kind of line up almost the same as the 200-day moving average. Okay, so when you use TA, it is always good to have an entry or exit point where multiple technical points align. We call it convergence. There's a convergence of points here where you have the gap fill, lining up almost perfectly to the penny with the 200-day moving average. So for whatever reason, if the market, the overall market decided to give back 2 or 3%, can Palantir break the channel briefly and come down and touch the 200-day moving average? Absolutely. Okay, so how I would approach this is, first, I will put in a buy order right now, good to cancel at say 14.8, something like that, between 14.8, 14.5. I will put in a couple of small orders in case there is a nasty wick down this week. If it doesn't happen, fine. I can also sell a naked put using the strike price of 15. Let's say a naked put right now is 20 cents, 15 cents, let's say 15 cents. It's roughly about 15 cents, I think. That means that I get $15 for one naked put. If Palantir drop below 15 by Friday night after 4 p.m., then I can buy 100 shares with a break even of $14.85 because I got 15 cents in credits from selling that naked puts, right? Once again, please educate yourself on what a naked put is by watching other people's videos. So there's a couple of strategies I can use to do that. So I can either sell a naked put in addition to put a bunch of buy orders at the 200 days. You can do slightly above the 200, slightly below the 200. I tend to throw in a bunch of orders at the 200 as well as below for a violation, because a lot of time whenever something touch a key moving average, sometimes there's a violation, right? So there's nothing wrong with putting something slightly below it as well as right on it. That's how I do it, right? Now, the other option play that I would do as well, should there is a decline, is what I did last week. On this decline last week into below 16, I did a put spread. A bull put spread is when you sell a higher put strike and buy a lower put strike. Okay, so once again, go educate yourself on what the strategy is and how to implement it. But so what I did was I sold a 15 put spread strike and I bought a 13 strike below. What that does is it protect me. How does it protect me? Okay, so if I sell a 15 put strike and then buy a 13, let's go back a little bit. If I sell a naked put at 15, what happened if the stock, hypothetically speaking, dropped to 10? I have to buy. That means that I have to buy the stock at 14.85. Doesn't matter if a stock is 10, 5, 0. I have to pay 14.85. That's what a naked put will force me to do if I keep it. Okay? So when I do a put spread, I protect myself. I cap my loss at 13. So if a stock drop below 13, then that 13, anything below 13 will negate further drop. So my maximum loss is 15 cents minus the $2. Okay, so I've lost $1.85. Once again, educate yourself on what a bull put spread is. Okay, but that's how I play. So I plan to approach this the same way I just outlined. I will plan to sell some naked puts, some bull put spread, as well as put in buy orders for some share around and near the 200-day moving average. But that's a strategy how I like to approach buying into a position that I want to be long using some major support lines. Okay, hopefully this video makes sense. Thank you for watching. Bye bye.